Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Checking in on SPY heading into Wednesday, May 10th. So a new all-time high today, but a little bit of a bearish end of the day. And what I am noting, we are watching the tech sector and the financial sector like hawks all of 2017 because they have been the driving factor behind this incredible SPY run, in my opinion. And we're seeing the financial sector has really been lagging this week. It's been the tech sector holding everything up. And now the tech sector formed a bearish reversal doji on the daily time frame after a bull run over the past few days. So we are anticipating consolidation to continue. And if the tech sector consolidates, as the candlestick today indicates, and the financial sector does not pick up the slack by seeing a bull day and a move back towards $24 on XLF, then we will anticipate SPY to consolidate as well. Anything above 237.70 will keep this very strong higher low pattern intact. If we break that level, we start looking to these gaps to fill to the downside, and that would change the momentum in the short term. But as of right now, bulls are still in full control, and consolidation would be normal and healthy as long as 237.70 were to hold. Weekly time frame shows that everything is support. On the verge of a bullish MACD cross. We'll see if we have to consolidate a little bit before getting that. But as of right now, no real red flags for the bulls until that support breaks of 237.70. IWM, pretty much the same candlestick, just a slightly lower high compared to what we saw yesterday. So it is an inside bar. Yet again, we have multiple inside bars in a row on IWM. And the range right now, a bear break tomorrow of 137.78. We're looking to the downside of 137.11. And a bull break of 138.83. And we're looking up at 138.99. So we have lower wicks 5 days in a row here with bulls buying the dip, holding the middle Bollinger Band daily support, and we're at a crossroads here where we're either going to see a bull break and continuation back to the upside or a bear break and be looking down at potentially setting lower lows. And with where the market is standing and where the tech sector is standing, if I had to guess, I would say it's a bear break more likely than not. But we've seen IWM do its own thing, disregarding what the S&P 500 has done a couple times recently, so not going to make any indication, not going to make any bets until we see where this inside bar breaks. And if we zoomed in on the hourly time frame here the past few days, it would just be higher lows and lower highs on the hourly, watching that range tighten, getting ready for a break. IWM, healthy consolidation on the weekly time frame, lower wick with bulls buying the dip, defending the middle Bollinger Band on the weekly, and this is just a higher low looking to form after a new all-time high. Anything above 132.40 is going to be a higher low. So the bull's still fully in control on the weekly time frame. QQQ, a little bit of an upper wick, not necessarily a bearish reversal inverted hammer. The upper wick size compared to the real body doesn't fit the criteria. The upper wick has to be twice the size of the real body to be a bearish reversal inverted hammer. But you compare it to XLK, which is the tech sector, and you can see that's clearly a bearish reversal doji. So QQQ holding up a little bit better than the tech sector, but with such heavy weights of the tech sector in QQQ, if we do consolidate there, we will look to consolidate here as well. There is a gap at 137.84. It's a very small gap. That would be a first target to the downside, and anything above 136.56 is just another higher low on this daily time frame. Same as SPY. As long as we hold the low of last consolidation, there's absolutely nothing to worry about. If that does break, then we need to take a step back and shift our perspective and look at everything more closely. So bulls very strong, and no sign of slowdown on the weekly time frame at this point for QQQ. A month in a row of straight green, and if we were to see further pullback, and we might get a bearish reversal candlestick on the weekly, but with 3 trading days left to go, we'll take it one day at a time, and there's nothing to worry about for the bulls on the weekly time frame at this point on QQQ. So short-term consolidation, more likely than not if the tech sector does consolidate, and we have some supports to be watching, and we'll check back in tomorrow. Thanks again.